Let's focus on Nalco. Today the stock is under pressure, but otherwise the Chinese stimulus announcements, well, it got the metal stocks very, very excited. In fact, Kotak is bullish on Nalco given its attractive risk-reward as well as the valuations. To help us out with how business is shaping up on ground, we're joined by Mr. Sridhar Patra, the Chairman and Managing Director of Nalco. Hi, Mr. Patra. Good morning and good to see you in. Thanks a lot for speaking to us here on CNBC-TV18. Aluminium prices have seen a good bounce. You know, they're holding around that $2,600 a ton. Could you tell us what kind of a price band we should work with for aluminium prices from here on? And also alumina, normally the derivation is as a percentage of aluminium prices. And last recorded, I think it was around 19-20%, which is higher than averages. What's the latest price that you have on your alumina sales?
Good morning.
Morning.
Let me tell alumina and aluminium. The pricing is basically based on a different mechanism. If you see the alumina price at present, the last spot what we have made, we have reached beyond 600. The basic reason is alumina price is depending upon the supply and demand forces. And Alcoa plant had production stoppage 2.2 million tons. And Rio Tinto Alcan also made production curtailment for making some changes in their plant. Hurricane Beryl also affected. So these are the temporary impact, but I feel this increasing price trend now at present, it is around 23%, 20-23% of the aluminium price, which is coming, it will continue. I foresee that this price trend will continue so far alumina is concerned during this 2024. And the metal price, if you will see, 2611, it was the highest in this financial year, which is on 30th September 2024. But this price, as per the market analysis, is highly expensive and it will come down. And that has happened. On an average, if you see 2024 aluminium price, it is 2451 till 30th September.
Okay.
And the market analysis anticipate between 2,300 to 2,400, it will safely move within this range. And I believe it will move in this range. And at present, the alumina price, if you consider 2,400 on an average of the aluminium price, comes around 21-22%. And this trend, I foresee it will continue for 2024.
Interesting, Mr. Patra. So you're expecting that aluminium prices will hover around $2,300 to $2,400 a ton, while alumina could hover in this vicinity of around 550. Should that be a ballpark number, $550 to $600 per ton?
Alumina price last spot tender we made, it is above 600.
Correct.
And I am expecting that this price will remain because the temporary factors like Alcoa plant interruption, Rio Tinto curtailment of production, Hurricane Beryl, because these are affect the market for temporary period. So to make correction, also I again say that it will take 4 to 5 months. So I believe strongly during 2024, my alumina realization will be good and it will be in this range only.
Now, just reconfirming that $600, sir, because if its aluminium price is going to be $2,400 on an average, then 600 would be close to 25%, you know, alumina as a percentage. But as you said, because there's a deficit situation, that's why you're expecting alumina prices to stay elevated for the next 5 months or so. Could you give us that number, the alumina deficit in the near term? Kotak is believing that it's around 500,000. Would that be a fair estimate?
Alumina deficiency is expected by 1 million ton.
1 million.
And metal surplus is expected by 0.5 million ton. As such, around 1.92 million ton of alumina is required for 1 ton of metal. So this deficiency of alumina and the surplus expected of aluminium will get compensated. And next year we will be getting a better picture. So there is no surplus of metal, no surplus of alumina.
Okay, so right now we have less of the metal going around than needed and less of alumina than needed. And there is this deficit situation, a slight gap that we're dealing with. But sir, that would perhaps put you in a sweet spot, right? Because you're also ramping up your alumina capacity. So given what you just described on price trends, both for aluminium and alumina and your capex, what should we work with in terms of FY25? How much of this capacity comes on stream this year? What about next year? And just give us some projections for the current year, given the market conditions that you described.
You see, the smelter capacity expansion cannot be made just by 1 lakh or 50,000 or 1 lakh, 2 lakh tons. Minimum capacity for smelter expansion, it is 0.5 million, otherwise it will not be economically feasible. So it is never expected that smelter capacity from 0.46 million ton to it will go 0.56. 0.462 we are planning to go by another 0.5 million, so it will be around 1 million ton. And refinery expansion, the fifth stream refinery expansion by 1 million ton, which is expected to be commissioned by September 2025. And if it is commissioned by September 2025, almost half of the 25-26 financial year will be getting additional aluminum. So I feel 0.5 million ton extra production of alumina you can envisage in 25-26. At present, we are doing around 2.1 million. So by 25-26, it will be around 2.6, and thereafter it will be 3.1. And metal production, we are ramping up. Our capacity was installed capacity 460,000 tons. Now this year, we have taken permission from the State Pollution Control Board to increase the production with the same pollution load. So we'll go up to 480,000.
Sir, so can you just tell us what is the capex with this kind of ramp up that you described over, FY25 and over 26? What is the amount of money that you're spending? What is the total capex and how much is, allocated for this year, 25, and how much in the next year, 26?
You see, for this current year, we have kept 2,000 crores capex, and that includes both the expansion of fifth stream refinery as well as modification and replacement of the existing asset of the existing operational plant. And next year also, we are expecting the capex of similar volume of 2,000 to 2,500 crores.
Sir, since you're describing the expansion that you're undergoing, and we've already discussed what the market pricing conditions are and how you're expecting alumina to sustain around $600 given the tightness. I'm just reading out some projections that Nigel shared. I mean, this is one of the brokerages on the street. Kotak is saying your EBITDA should rise by 8% in FY25, by 11% next year, and by 17% in FY27 as a lot of this capacity comes on stream. Are these fair assumptions to have, expectations on the EBITDA increase? 8% this year and 11% next year?
I am always optimistic that we are the lowest cost producer of alumina and bauxite. So if the same cost remains, then definitely we will perform better than the market expectation. And again, I am telling our caustic soda plant with GSL, that also started operating at 90% capacity this year. It is likely to operate at 100%. So once it is operating at 100%, that profit margin also will come to us. Whatever caustic soda we are procuring from them, being a JV partner, that profit margin also will come apart from raw material security. So I am quite optimistic that will be performing better than the market expectation.
Okay, got it. Just a quick word, since you have 2,500 crores of capex lined up, you're sitting on a good amount of cash. So all this capex will be via cash as well as the operating cash flows that you generate. No debt is what you'll take on?
You see, the capex target, what we are keeping, so for resources concerned, we don't have any constraint. Because it is a zero debt company, we are expecting based on the cash outgo. If the fifth stream refinery is commissioned, basically 20% retention money, all this money which will be paid after the plant is commissioned and the trial run is made successful. So I am quite hopeful this is just a expectation that this will be around this. Even if it increases, we don't have any resource constraint, we can go ahead.
Just to confirm, you will continue to remain a net cash company despite this big capex plan, right?
Yeah.
Got it. Let's talk about yours focusing on the cost side. And the street is quite excited because one coal mine started ramping up and giving you coal. Now the other coal mine as well is ramping up. So I think your total requirement is around 6.5 to 7 million tons. How much of that requirement will come in for captive sources? And what could the savings be in FY25 and then in FY26?
If you see the coal, Utkal D has been made operational. And last year we achieved 2 million ton. Current year by September, 2 million ton we have achieved. And the consolidation of Utkal D and E is under process. I am quite hopeful that within a month or two, we'll get all the statutory formalities completed. So we will go beyond 2 million ton this year coal, and next year I'm confident we'll go beyond 4 million ton. And
Okay, so
at present, the company is getting a benefit of around 350 to 400 crores due to operationalization of our own coal block. And another aspect I will tell, whatever the cost difference we think between my e-auction coal and the cost of production, that I am showing as a gain. But the indirect benefit what I get, I am assured not to purchase any power. The power what we purchase during the rainy season, etc., it is an excessive price.
okay.
So that also will give a savings, will not purchase power. And coal security, non-purchase of power, and which will ultimately reduce the average cost of coal. So in that way, I will be much beneficial once it is made 4 million tons. And there is a provision that up to 40% we can go up, ramp up our production. So once we achieve 4 million ton also, we can ramp up to 5.6. So the profit will be multiplied and the company will not look back.
And this number of 350 to 400 crores is based on getting 4 million tons, right? This savings of 354
400 crores we are getting at present from 2 million ton.
from 2 million tons. Okay, so when you go to 4 million tons, it will be close to around 800 crores.
Exactly may not be 800 crores, but it will be beyond
Got it.
600 to 700 crores.
Got it. All right. Thanks a lot, Mr. Patra, for joining in, giving us your take on business. You seem to be confident. We look at the delivery from here on. But clearly, pricing in your favor, costing as well is something that you're focused on. But